the buzz around cryptocurrencies and decentralized finance, the world markets seem to have come to a realization that cryptocurrencies are indeed a valuable source of wealth generation, but only when complemented by centralized legislation and not in isolation, which has been the case for so long. Well, the American Securities and Exchange Commission, the SEC, which watches over the largest securities market in the world, has today approved 11 applications for exchange-traded funds that track Bitcoin, the world's most popular cryptocurrency. And amidst a string of bankruptcies and scandals, including the implosion of crypto exchange FTX, whose founder Sam Bankman-Fried was found guilty of fraud, other exchanges have been accused of flouting U.S. securities laws. While Binance, the world's largest crypto exchange, recently pleaded guilty to breaking U.S. anti-money laundering laws. It is fair to say that the market is wary of this new source of wealth, but there's some caveats too. This move by the SEC, however, is a big step towards a reconciliation between the SEC and the cryptocurrency market. Before we begin our discussion, let us first understand exactly what exchange-traded funds are and how they differ from mutual funds as well. We'll also talk about this with our guest. Joining us on the show is Dr. Sharath Kohli, Senior Economist, Nikhil Sethi, MD, Zuvomo Private Limited, Crypto Advisor. Also with us on the show, Atulya Bhatt, Chief Marketing Officer of BuyuCoin, with us on the program as well. Ajit Khurana, founder of Reflexical, also joins us on the show. I'm going to go to the big screen and try and explain what exactly we are dealing with here. Exchanges and of course the cryptocurrency factor thrown in is going to yield a lot of regulatory challenges, but how can they be covered? How can they be managed? What are ETFs is the big question. Well, an exchange traded fund is a type of pooled investment security that operates much like a mutual fund. But of course, on the other hand, you would have a cryptocurrency, whereas on this side or in this particular area, you have the regular money as we know it. Unlike mutual funds, ETFs can be purchased or sold on a stock exchange the same way that a regular stock can be sold or bought at an exchange. So it is very similar, very analogous to a conservative or an established exchange. ETFs can contain all types of investments, including stocks, commodities, or bonds as well. So very similar to what we've been dealing with. In that regard, this obviously creates a lot of ease to understand how ETFs operate. The first ETF was the SPDR, the S&P 500 ETF, which tracks the S&P 500 index as well. Moving on, ETFs offer low expense ratios and fewer broker commissions than buying the stocks individually. See, obviously, the brokerage part as well as the commission part is something that gets taken care of. There are perhaps lesser cost involved in that. Dr. Kohli, coming back to you. Well, there was a time very recently, Dr. Kohli, that cryptocurrency had almost seen a sunset in a number of countries in the world. But this reconciliation, this consolidation which is spurring up with the SEC and of course a number of other cryptocurrency platforms, what kind of a resurgence would this be categorized as? And would you also call it as some sort of a colloquial or a proverbial comeback?
Thanks, Vineet. Undoubtedly, this is resurgence of cryptocurrencies because an ETF being launched, which is based on Bitcoins, is definitely you're putting a stamp of sort of recognition to Bitcoin. Now, there are two scenarios, Vineet. There is an international scenario vis-a-vis US and a few other countries. And there is an Indian scenario, as we are talking in India right now. So let me talk of the Western scenario or the international scenario for now. Well, there are a lot of countries which do recognize these cryptocurrencies. There are ATMs in certain countries where you can withdraw, you can go and transact in some countries. So I think in terms of recognition, the cryptos are at different stages and recognized differently by different countries. But for SEC to accept applications on ETFs is definitely a big move. We all know that US is the biggest financial market in the world. And I think if that is a torchlight, then I think rest of the countries could follow suit, or at least they can get some confidence of the fact that if SEC is recognizing these ETFs or probably contributing to launch of ETFs, then it is high time that we also give some kind of respect to cryptocurrencies. I think it's great news for my fellow panelists who deal in cryptocurrencies, who are either running an exchange or who are advising or who are trading in whatever way they are connected with. Because you're right, as far as India is concerned, crypto had almost seen a sunset, and it is in a very complex situation in India. We all know that Reserve Bank of India is up against it. If left to Reserve Bank, cryptocurrencies would have left India a long time ago, and it would have been declared illegal thanks to the government of India, which has had a bit of a neutral stance. So I think, as far as India is concerned, it is hanging in between Reserve Bank's totally anti-crypto approach and government's neutral approach, is somewhere in between that, which is why a lot of exchanges, a lot of people who were regular traders, a lot of investors had pulled back, and a lot of people who were in the business of minting as well, they had also put back. A lot of investment had gone a waste in the recent months. For that, I know a lot of people who had invested. So all in all, I think a piece of finally good news. We know that crypto runs on news. Suddenly, somewhere around the world, one country recognizes, the prices start moving up, and somewhere there is a negative news and the prices start going down. But my only concern is, which I'm sure my panelists would like to address to that concern, is that unlike other ETFs, for example, gold ETF, gold ETF is obviously backed by, we know in MCX, if gold is traded, it is obviously backed by solid gold. But that is not the case with crypto. It may be backed by Bitcoins, but then behind Bitcoins is just a mathematical formula. There is nothing very solid, very solidly fundamental, I would say, which I'm sure my panelists would like to comment upon far better than I do, because they deal in crypto and they are connected to the world of crypto. But having said that, great piece of news, and I think it should excite all the crypto operators, people connected with the crypto industry across the world. Vineet.
Nikhil Sethi, your perception of how is this likely to give that trust platform that crypto perhaps lost somewhere a few months ago, rather a few years ago?
Right, having been in the space for the last 5 years, for the last 6 years, we have seen a lot of turmoil happening since 2017. Be it the FTX collapsing last year, be it the US Department of Justice fining Binance for about $4.3 billion. So if we have seen the turmoil happen, and addressing the issue here, that the market has evolved a lot. We started off with no regulations, and then a couple of other countries got regulated. In fact, Abu Dhabi and Singapore have been leading this initiative, and good to know that the US has also joined the force. But it's a landmark moment, because I think it's the biggest development in the finance space in the last 30 years. The last one, as you rightly mentioned, was the S&P index being launched in 1993, and and then now we have the big names. We have BlackRock, we have Grayscale, who have entered the space. They control trillions of dollars. So the market has only one way to go, and it's a very positive news for us.
It's a positive news, Atulya, but what will it take for this positive news to be sustainable, and what will it take for regulators and some sort of a legislative ecosystem also to be developed, so that cryptocurrencies can coexist with other forms of currencies, but in a more transparent and trustable manner?
I mean, first of all, thanks for having me on this panel. I would like to start with giving a little bit of perspective over this Bitcoin ETF news, and also Dr. Sharath spoke about something related to how gold and Bitcoin ETF differs as a fundamental asset, right? So, I mean, first of all, Bitcoin has now finally found its home at the Wall Street. I mean, it's a very massive, big news. It's like it was coming a long way. Decade-long process it has been spent on, getting those ETF approved, and now BlackRock, the world's largest asset manager, has the ability to invest like pension funds, 401ks, over into Bitcoin. I mean, they have the ability. So first of all, that's that. I mean, the secondly, now we have to see like what a real impact has this ETF has on the overall space. I mean, from my perspective, I think most of the ETF related movement would be related to the institutional investors. I mean, they would be easily able to invest in Bitcoin as Bitcoin, but without actually owning them, without actually owning the wallets and having some regulatory issues that big asset managers like BlackRock would have faced. They and other trusts related activities, and even like future derivatives used to exist before as a institutional investment means, but it was pretty limited. Now they get the direct access to work on its movements. So that's that. But I mean, again, it depends on how the market is actually going to take it, and it could be a butterfly effect where we see a lot of things happening towards like the regulatory part of it. I mean, SEC has a very huge impact on decision making across all the whole global regulatory space. I mean, so we have to all those things have to work in tandem for this crypto, Bitcoin ETFs and these other related activities to actually take a hold. I mean, the concerns right now are related to exchanges, like you briefly mentioned SBF, and my panelist Nikhil mentioned the Binance row that has been happening. So I mean, those things have to be managed under the very tight regulatory scheme aspects, and you have to bring those transparency to the whole space. I mean, and Bitcoin ETF actually provides, because a very large asset manager like BlackRock or Invesco would be handling those assets, and they would be under tight scrutiny like they are like from their investments in the other spaces. So I mean, that's that. And think, giving my perspective a little bit on Dr. Sharat's questions, like how they differ fundamentally, those like Bitcoin ETF and gold ETF. I mean, gold and Bitcoin actually resemble fundamentally in some ways, because they are both limited. We have a limited supply, and we have to work with that. And there would be competition from both institutional and retail investors coming for it if the Bitcoin ETF becomes successful. So I mean, they resemble in many ways, and even like Bitcoin is called the future of like digital gold of sort. That I mean, that has been suggested before. So that's my perspective, and we'll have to wait and watch like how big of an impact this brings to, and what kind of volumes and what kind of liquidity this Bitcoin ETF brings in for the US, and then the further things will clear up.
Ajit, the American market and the advances that they have just put through in the market, are they likely to have some sort of a percolating effect in India as well? They usually do in China, but is India, with its very, very indentful, robust, and to a large extent a conservative outlook, will it actually look at these developments in the USA as also something which can be applicable in India or not?
So I must point out, in the context of your question as well as the discussion so far, that it is important to distinguish between Bitcoin as an asset, regardless of whether you purchase the spot Bitcoin or the spot Bitcoin ETF or a derivative of it, and cryptocurrency as a whole, or businesses which are related to them. The challenge that all regulators around the world, and I bring in the Indian context also, has been around two areas. Number one is service providers such as exchanges and what they are doing. And second is issuers, where people are coming up with their own version of Bitcoin, which could be called a cryptocurrency token or what have you, and fundraising without following security norms. Today's action, yesterday's action, depending on which country you're located in, of the US has not done anything to address these concerns. all it has done is it has allowed Bitcoin to be indirectly purchased through financial institutions. You could always have purchased Bitcoin even in India by going through a cryptocurrency exchange. Now you can go to a regular SEC approved exchange. To answer your question more directly, the largest regulators in the world, primarily I would say USA, UK, and to a lesser extent the Monetary Authority of Singapore, have played some sort of a leadership role which other regulators do look to. In fact, even the Indian RBI and SEBI do play a leadership role for a lot of other countries in the region, 50 plus countries to look up to. It is not just whether they get encouraged or take inspiration, it is that there are going to be repercussions on their market. For instance, today, there are 3 extraordinary tax implications for crypto investors in India, which are not applicable to anybody else in India. One is that they pay a flat tax rate. They don't pay a tax rate based on their slab. Second is they pay a TDS on every transaction. And the third is that they cannot set off their losses against their profits. These are extraordinary. Now, the interesting thing is there are many service providers in India who allow resident Indians through their bank account to invest in US markets. I can name some. I'm not associated with any of them. There is Ind Money, there is Vested, there is Vinvesta, there is Interactive Brokers, and a whole host of others. Today, any of you right now, because the US markets are about to open or maybe they have opened, you can go, you can sign up there completely officially through your bank account. Now go and buy a Bitcoin ETF and dodge those 3 draconian clauses that India has placed. That means TDS on every transaction, the 30% flat rate, and no set off of losses gets dodged. Of course, the new thing would come in that you would pay a TCS, which is tax collected at source for your remittance. But what I'm trying to get at is that if Indian regulators don't take inspiration from what happened with the SEC, they're going to have to bear the brunt of it. If by any chance what I just described remains a fringe activity, no problem. But if many people start getting interested and saying, you know what, I can buy Bitcoin in Indian exchange or I can buy Bitcoin in US exchange and it's more tax friendly to buy in the US exchange and maybe I trust it more because it's a regulated exchange as opposed to an unregulated exchange, it's going to raise eyebrows. So repercussions are inevitable, but extending this to now somehow talk about cryptocurrency as a whole or the cryptocurrency ecosystem as a whole, I think is too premature. It is related to BTC, that is Bitcoin.
Dr. Kohli, same question for you. What are the implications on the Indian market because of this move? Gone are the days when we actually, had any cascading effect, when something happened in the US, and obviously it was seen in India as well. We have our own ecosystem.
Well, Ajit has brought up some very, very important issues, and so have the other 2 panelists, distinguishing between an asset and an exchange. The problem with RBI was that they did not want this to go through because obviously they could not have had a parallel currency running. And you call it as a cryptocurrency, basically. I'm putting in inverted commas. Whereas they were fine if this is called an asset class. But the problem is because it's got an international root. If it is called cryptocurrency in America, in Singapore, and other places, it has to be called cryptocurrency. So that was one objection with RBI, and it's probably create a parallel currency system, which obviously RBI is the sole and only sovereign regulator of currencies in India. 1. 2, the problem here was that this was promoting illegitimate activities. We saw terrorist funding. We saw all sorts of nefarious, transactions being done for illegitimate purposes. So that was other concern. There were security issues. Now, coming back to what Ajit said about the tax aspect, Indians are allowed $250,000 per annum under the liberalized remittance scheme, which every Indian can remit to anywhere in the world. There's a problem there. I would specifically speak to Ajit as well, apart from the viewers and the rest of the panelists, is that it is liberalized. There's no doubt. You go to your bank. There is a form called Form A2. You pick up that form and, you have to tick mark the box that what is the purpose of remitting this money. Now, the $1 billion question here would be, would remittance for investment in an SEC recognized exchange, that is in a Bitcoin ETF, in a crypto ETF, be allowed under the liberalized remittance scheme? So that is the basic question. My own feeling is that RBI may have reservations. You can invest in a stock, you can invest in a property from India, you can send for medical purposes, you can send for education purposes. Obviously, their TCS rates are different. They range from 5% to 20%. They have been revised recently. But will RBI allow investment in a crypto ETF from India? I think we will have to, because it's a very, very recent development, only last night. So we will have to wait and see whether this is included in that list or not. So to answer the question whether there'll be Indian interest evincing in this will purely depend on the regulatory mechanism and the regulatory freedom that is given by RBI to cover this under LRS, because this has to come under LRS. There is no other way you can send money outside India. So that is one point. But I think the more pertinent point remains, as far as India is concerned, that when will the bridge between RBI's perception and Government of India perception of cryptocurrency be bridged? I think that gap still remains, although Dr. Shaktikant Das, who's the governor of RBI, was formerly connected with Finance Ministry. And I think, but per se, because of the reasons I described earlier, RBI is very strictly against any kind of formal recognition being given to cryptocurrency. However, Government of India's argument was that because this is based on blockchain, we can use this technology, blockchain technology can be used, but to allow to completely recognize or to completely declare cryptocurrency as illegal, we should hold our guns for some time. So I think that gap is still standing there. But as I said earlier, SEC being part of a regulatory authority of the world's largest financial market, I think this recognition should be, if I ask somebody in a very informal term, by no means this is an advice. If somebody wants to pick up Bitcoin tonight or whatever, you can pick up and you can expect some kind of rally coming in. But then, as I said, news keep pouring in for these cryptocurrencies from all sorts of quarters. And my other question, which I have, which is not clarified, is that this is going to be a BTC-based ETF. Well, there are thousands of other cryptocurrencies. What happens to them? Will SEC or will another ETF application be filed for Ethereum or any other cryptocurrency for that matter? The answer so far is no, because this has only been given for Bitcoin. So does that mean, I think Ajit has an answer. I would love to hear him out on this. But the problem is that are you giving only to Bitcoin? Then what happens to other cryptocurrencies? That's my other question. And I think as far as India is concerned, we will have to wait and see, Vineet, whether Indians will be able to participate in this party. Because if you hold a Bitcoin in India today and you are doing it by whatever you're probably paying through the bank, what happens to the exchanges? Will this also dilute the role of crypto exchanges? Will people move away from these exchanges? I would rather go through the ETF route rather than coming into question with Binance or any other crypto exchange for that matter. So these are the questions which I feel time will answer, although I saw Ajit nodding his head for he's got answer to one of the questions.
All right. Well, we've run out of time, but would definitely like to hear from Ajit if he can just sum up, his statement in less than 30 seconds. Ajit, go ahead.
S0001 is the purpose code. You can invest from India. Indians have been investing in listed Bitcoin products, though not ETF, for a long time. Possessing Bitcoin gives you a relation to many of its qualities. Only the economic quality is captured through an ETF. So some people who are purists may want to still buy Bitcoin directly. And finally, the other assets such as Ethereum and so many others actually were at some point of time or the other sold in some sort of a public offering, thereby probably getting an attribute of a security, which Bitcoin never was. As a result, it was easier for Bitcoin to be not called a security, as Chairman Gary Gensler has done. I've tried to sum it up in 30 seconds. I hope I helped.
All right. Well, that sums it up very nicely, and it's also made Dr. Kohli give a thumbs up to you.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.